All right, so turnaround Tuesday. Um, I believe in him. Enough so that I squared positions. Also, I believe the ECB is tomorrow. So, the narrative in the Dixie that I've been talking about for over a week is that it was not going to be a layup to break out over 97.80, 97.70, wherever you measure it from. So we had initially this break, and then it rallied more than I thought it would here, but we failed again here and took out 97. So, you know, classically, if the ECB wasn't here, wasn't a Tuesday, I would have stayed short, but I booked squared here just in case we get some type of what everyone's expecting, dovish draggy, and we get a rally. I would attempt Dixie shorts again up at 97.20. I still think there's the potential for us to trade initially here, and possibly all the way back down towards 95.85. So that's my view on the dollar. Could it stop here and just blow off to the upside? That's possible too. I've been doing it long enough to expect anything and everything. So flat there. Also, the yen from being negative the last few days, kind of a similar setup in the yen. We had a three driver up here, and we have confluence of the moving averages right here at 20. It's even clearer on the 1 hour. See that? So, as with the dollar, this could pop. This is there are a lot of people that are bullish a dollar that are also bullish U.S. dollar yen, which I have a hard time figuring out why, but they are. So the yen could pop here. So actually, I'm flat. I was early here at 58, and weathered the drawdown and started booking stuff here. Tried another short in here that now I'm now flat, and I'm flat. So that's pretty much it for currencies. I still remain bearish, very, very short term in the dollar, looking for the levels that I just talked about. My narrative for the week, and we'll see if the S&Ps will cooperate, is I'm looking for highs in the S&Ps for the 1 millionth time. Still think there could be one more shot up, but we are diverging even on a lot of shorter time frames. There's the S&P, the NASDAQ. What I'm really laying for is with the move, and we talked about it, I showed the weekly chart in copper, is one more shot up in copper towards this $3 level up here. Here's the line, about a nickel away. And it's my thought that potentially one more extension up in the stock market could do it. Again, I look at what copper has done, which is economically sensitive, and compare that to what's happening in crude and what's happening in stock indexes. And also, the 301.90 level is 61.8 back of this decline. It's my contention that we're setting up for a lower high, failing rally in copper. So, monitoring this $3 to 301 area for a potential short in that, because compared to the S&Ps, look at this. You look at the copper, and then you look at any stock index. Go S&Ps. Look how much stronger we're almost at new highs in the S&Ps. And then you look at crude, a lot stronger than the copper. And I believe that we're near a lot of levels Greg had talked about and a lot of the bulls have talked about. And we're finally on the 1 hour right here. So we haven't had a 1 hour divergence for quite some time back here. And really, back under 62, this is that wedge line. Steve has this line too. And now moving averages are converging around 62. So I was thinking if we had one more high here, okay, this looks like a 1, a 2, one more high. I'm going to attempt to short for a turnaround Tuesday. It may already be in progress, but I'm going to try and be patient. If they could bring the S&Ps back, unless we're just going to roll over from here, attempt this, but only for a trade. It doesn't turn into a position until we start closing back under the wedge line and negate the throw over. So those are my thoughts this morning. Any questions on anything? You really don't have to agree with my analysis. I just want to make sure that you get it, and it's, you could include it in your intelligence gathering for, potential trade setups that we, the team, lay out for you every morning here in Face. I'm going to let the guys cover that, Gerald. How about anything that I covered? Crude, copper, Dixie, yen. Okay. All right. So here's your homework assignment for today. Sign up. That's your homework assignment. And after the sign up, learn to navigate the site. Study all the active patterns in play. So, Blake's been all over Aussie Kiwi for a while. Andre's got a cipher going bearish. And Andre's got a cipher going bearish in yen. What's its target? 110.36. That's viable. So I'm pretending I'm you right now, Greg is bearish as Swiss, still hasn't taken out his invalidation. Greg is bearish Canada, had a big day yesterday. So only one of these pattern in plays are down 0.4%. Pretty good track record just if you looked at today's active pattern in plays. Let's see, 1, 2, you're up about 2% if you took them all. Most people would consider that a pretty good week. 2%. 2% times 52 weeks in a year is 100%. So have realistic expectations. Don't try and make 20% a week, or you might go broke. Okay, so it's baseball season. And anyone who's a baseball fan knows that most of the greatest home run hitters in the history of the major leagues were also big strikeout kings. Okay, so, we only get one at bat at a time. And if we strike out, we don't come back in the fourth inning for another try because we're out of, they take our bat away in this business. So don't swing for the fences. What I've noticed here with the team is they grind it out. Blake grinds it out. Okay. Yeah, sure, there are windfalls. Okay. All right, Russell, good luck with that. But Blake grinds it out. We all grind it out. We're not trying to get rich today. We're embracing the philosophy of do the right thing today and tomorrow takes care of itself. So this is part of your homework assignment. This will cost you $1 to try it. I really recommend at least a 90-day subscription because, if you're going to make judgments about any service, I don't care if it's in this industry or not, you really need to give it 3 months to really have a chance to make a fair assessment. In my opinion, you can't really judge anything in 10 days, but at least it'll give you the flavor. And the second part of your homework assignment is to get a hold of Justin and Trent, our sponsors that are making this available to you for free. That's pretty cool, isn't it? These guys, and of course, they're doing it in the hopes that they could help you. And they can help you by, if you're not getting a rebate check from your broker, you're helping your broker, which is fine if you want to do that. But why not have some mailbox money like Steve? Okay, Steve, I know you weren't that active. Maybe you weren't that active. There's some personal things going on. What was your how much was your last rebate check for? because you don't need to be reimbursed for a service that you have put in 1 million hours to build up. If you're here, Steve. So maybe he's not here yet.
I don't think he's here. I don't think he's here yet.
I am here.
Oh, what was your last rebate check?
I think a little bit above $50.
Okay.
And as you said, these last few months, due to low volatility, I'm usually at one trade at a time at a full position. I mean, so yeah.
What's been your highest check when you were active?
I don't remember exactly. It's not that I have too many months, but
okay, Steve, will you please start churning yourself so that you can get so that when I ask you this question, you have a better answer, huh?
Okay, coach. I'll do my due diligence.
Hi, Blake. How are you today, buddy?
Hey, good morning, guys. Good. I was just letting you talk. Just keep talking because there's nothing happening right now. You talk away.
It's hard you see. It's even hard to churn yourself in this environment.
We have a 25 pip trading range in the euro dollar right now, since yesterday afternoon. So I mean that's
drying. Yeah.
It is so horrible. The environment is just so horrible right now. So
that's why there's a lot of crabby people out there.
Yeah, I mean, here's the thing. This low volatility environment's only going to last so long, and I hope today is like the last day of it. And we get some activity tomorrow. One thing that I've read on multiple accounts from everybody is everybody's looking at the dollar index, and they all think the same thing. Above 98, below 96 in the dollar index. That's it. I mean, we get above or below, and you're going to start to see some rock and volatility in the market, and until we get that, it's just kind of sideways. So personally, I know
that formation started the top of it anyway, so this has been going on since September, October. That's a long time.
6 months. Yeah, I mean, we're talking six months plus of really, really crappy volatility. But you talked about you think the dollar is going to go down. Here's do you know the reason? What?
Well, I'm thinking down, but holds or maybe takes out that line. My preferred count is that after we go down is that we break out to the upside. That's just my Nostradamus thing. I think we break out to the upside. We've knocked at the door too many times, I think.
Okay, well, the reason why I believe that the dollar is going higher is not because I think the U.S. economy is look at crude coming down.
Yeah.
Watch crude carefully here. Hold on really quick. Let me pull that up. There we go. So crude, just so you guys know, first of all, we just challenged the lows from August of last year. We're above the 618. Okay, we're above the 618, but we're at the top of what I would call the resistance zone. Okay, so you can see this is a big zone of resistance, and we have the 618 at 63.86. Then you can go all the way up to 64 and change. Relative strength is obviously overbought, which is still confirmed to move higher, but it just you got to be a little careful as we're overbought and pushing up against previous support acts as current resistance. So and then if you look at crude intraday, we just started selling off a little bit. Now futures are I say futures are coming down, but they're not. But that's just something just to pay attention to. Just watch crude because maybe I'm kind of looking for the domino effect here, meaning that if one asset class starts to move, it might provoke some other asset classes to move as well. So, if we see, crude oil come down, maybe futures start to come down, and if futures start to come down, maybe the yen starts to strengthen. If the yen starts to strengthen, maybe the euro yen falls. If the euro yen falls, maybe the drags the euro down. So I'm looking for some sort when we don't get in these low volatility environments that often, but when you get into them, I tend to start looking for the domino effect. What's going to create some further volatility in the markets, and hopefully crude is it. But Coach was talking about the dollar, and like I said, the dollar. I'm not bullish the dollar because I'm I think that the U.S. economy is, going to be growing at 4% next year. It's nothing like that. I'm mostly just bullish the dollar because I think that we're going to get some sort of trade deal, but I also believe that the U.S. equity markets are probably going to start showing some signs of weakness, and the dollar is going to be, catch the safe haven bid. But we still have a little bit of downside as far as today goes. The dollar index should get to the 38% retracement. So if you look at this as being a possible flag pattern, we should, I would think, let me grab a pen, black. I would think that we can get down to here, before pushing back up into this flag, and then we're gonna be in this flag going into tomorrow. I think that means that the euro should be capped at the 132.85 level. Now, I know we have an inverted head and shoulder pattern. Everybody sees it. It's not just you and I, guys. It's everybody. Okay, the inverted head and shoulder pattern, takes us to 113.30. You guys know I'm not like the worst pattern to be trying to target is a head and shoulder pattern, but at the same time, when everybody sees it, then you have to start thinking it won't even make it close. So I think that this 113.80 or 112.85, maybe up to 113, somewhere up in this neighborhood. Let me just delete this really quick. I think this is all doable up here, somewhere up in this neighborhood for the euro dollar. This is a 4-hour chart, 4-hour candle. We're not quite overbought. Hourly might be a little overbought, but no, just divergent. Divergent here, but that doesn't mean that we can't, make another stab and relative strength goes overbought, moving up towards 113. I still think it's possible, but I think you gotta look at this as being pretty good resistance. Now the cable is still in this bearish wedge. You can see this big bearish wedge. Every day my trend line gets a little jacked up, but this is a bearish wedge right here. We're in the middle of the wedge currently. Nothing to do right now. Just sitting there. The Aussie broke out of this triangle, and that's made some good headway. It's obviously helped my Aussie New Zealand. I took a little bit more Aussie New Zealand off profits. Let me ask this: just how many of you guys have been riding this Aussie New Zealand to the upside here? Has anybody been long that the Aussie New Zealand for the last week and a half with me? Because there's not, I've told you guys there's not a whole lot to do, but when you can find a cross rate that's moving, it's good. So David has been, Scott, Rick, Ryan is, Alejandro, Hirab says I was in before you. Great, fantastic. That's awesome. So I really don't care if you're in before me, but if you see that that I'm in a trade that you're in, hopefully it makes you feel a little bit better. I don't care who's first. I just care if you're making money. It's all that matters. But right now you can see that the 4-hour chart is divergent. You can see how we're moving higher. We're up at some pretty key fibs, and keep in mind there's a 38%. This is the longer term 38%, which is going to be the first target coming out of a descending wedge. When I say descending wedge, I should do this. Okay, your 38% retracement comes in at 106.24, but like I said, we're starting to see some divergence here, and we're at a 78% retracement of this move. Okay, so be a little careful if you're long. Like I said, I took some off here at 90, 92 this morning. Let's see, my last exit was at 91.9. So yeah, basically 105.92. So, you know, I'm hoping that we get a little pullback back to 105.50. I've got some bids down there. My fear is if we get down to 105.50, it's, you know, we're going to be probably under a little bit of pressure for a few days, but you know, and get a little bit more of a substantial pullback towards somewhere down here is what I would think. But any type of dip, you know, from here, you know, I'm looking to reload pretty aggressively. So, but it's been a nice trade thus far. Let's go over to let's see, dollar Canadian. Dollar Canadian's breaking lower a little bit, and which, you know, is surprising with crude oil as weak as it is. But dollar Canadian could be on just a stop loss hunt. You know, right now, let's take a look at where the 127% extension comes in. That comes in at 132.67, which I also believe that is a 38% retracement of this move. Let me double check that. It is. So that looks like where we're going, if you ask me. Let's go do this. So the dollar Canadian, it looks like to me that we should see right there, which would be 132.70 roughly. That's 127%. Let me get rid of this. Get rid of the messiness. Okay, that should be 127% extension, 38% retracement of this. You know, you'll see some trendline support coming through these, you know, these levels. So we should get down here. And if you're looking for longs, that might give you an opportunity with the CAD. We don't have any Canadian news. We just watch crude oil too, because crude's a little weaker. Actually, stocks are coming under pressure. That hasn't moved the FX market yet. I think all the algorithms are off right now. No one has any on, but you know, they could start coming on too if equities continue under pressure here. Let's take a look at the peso. Dollar Mexican peso in a down channel. We are challenging this previous trend line here. It's been holding us thus far. 78% retracement comes in at, oops, I didn't mean to do that. It comes in right here at 1890. So we might see a little bit bid come in here soon. Equities are really coming under pressure. Dollar yen, I should also point out, we have a head and shoulder pattern. Neckline comes in at 111.20 as well. So if we start taking out this previous resistance, which is acting as current support, we might get a little bit of a downdraft in the dollar yen. Now I'll leave the rest of the yen pairs for Steve, so he has something to talk about today. I don't want to take all that away from him, but just something to watch. Now let me take a look at one last thing. Okay, so South African rand is under pressure here. So the emerging market currencies like the peso, the rand, let's take a look at the lira, even though we can't trade the lira right now. I can't. It's too expensive too. The lending for the lira is completely dried up, I think, for political reasons, and I can't even trade it right now. So, but watch these emerging market currencies, because if you see, you know, the rand or the lira or, you know, the peso start to come under pressure and you start to see the dollar lift, then you know that this, you know, sell-off that we're seeing in equities might actually be real. Right now, equities are selling off. You can see when I say they're selling off, we dropped a couple of points. I mean, you know, S&P dropped 2 points. It's like, woo. But if we see we start to see like a 10-point S&P move, and then you start to see the emerging market currencies come under pressure, that might be a, you know, indication that, hey, there's maybe some more significant selling coming on. I don't think anybody's worried about the stock market 2-point drop right now. We're in a bit of an ascending wedge here on the hourly. This is the S&P. But if we start getting down here, below 2878, so you're talking about 10 S&P points, which in all actuality is a pretty big move considering what we've been seeing. But if we see, the S&P get down here, you might actually start to see the emerging market currencies come under a little bit of pressure, and you might actually see the dollar firm up a bit. So, but that's asking a lot, especially in this environment right now. Let me take one look at the Nordic and the Nordic currencies. So here's the US dollar, Norwegian krona. Nothing to really do there. We're capped by the 618. We've got major support around 842. You can see that all that big support down here. Swedish krona. Nothing to do here either. So overall, like I said, pretty quiet environment. We have the ECB tomorrow, and that's going to be the big news for the week. So I think the market's going to be fairly quiet, until the ECB. Hopefully we get some volatility, but I don't know what's going to create it today, unless it's some headline risk on China. It should be fairly quiet once again. So Steve, I'm purposely leaving you a lot of stuff to talk about. So
you mean nothing to talk about?
Yeah, I'm leaving you a lot of different cross rates. I could have dove into those to get into some of those, but no, I figure I'll leave them for you. So what's happening over there, Steve?
Everything is fine. Markets aren't doing anything, so that's a problem.
Yeah, it is a problem. Remember, I used to do 4 hours of webinars back when I was with Wise Trade /MB Trading /Allied Financial. I did 4 hours, and when I had periods of the market that were like this, try taking up 4 hours of talking and see how you fare with that.
Oh yeah,
Steve would have no problem with it.
No problem. Yeah, that's what I was doing.
I forgot who I was talking to. Yeah,
know your customer, Blake. Know your customer.
So, at least Steve has. You only have 30 minutes, Steve. So make sure you contain yourself.
The introvert, Steve.
Steve, let me take the first 5 minutes then.
I hope you manage to take the first 15 minutes, Telio.
Okay.
Can you do that?
All right, guys. Well, hey,
sure,
good luck today, everybody. Tomorrow, let's hope.
Blake.
Thank you.
All right, buddy.
Thanks,
Okay, Blake.
Okay. So just a quick rundown of what's been happening.
Hurry up,
last
Steve.
night.
Can't wait.
We had another one of the infamous Trump tweets where he talked about the European Union has been subsidizing Airbus, and he mentioned on his tweet that the WTO found that this has actually adversely impacted the United States, and he said that there's going to be $11 billion of tariffs on EU products. So he's pulling out the punches against pretty much everybody, it seems. So that was interesting. I mean, as a headline number, it's not a huge amount, right? 11 billion compared to the 200 or whatever it was with China, but still, it shows his way of thinking, let's say. So that was interesting. Then we had this morning, the pound that rallied this morning after there was a headline that said that I actually couldn't find who it was, but it said that there was a UK lawmaker who was advised that Angela Merkel was willing to put a 5-year time limit on the backstop. And the pound, like that, rallied like 20-25 pips, not a lot.
And then they refused the rumors, and we had another news event round trip. Yeah.
Yes, it was denied by spokesperson. So that was, 25 easy pips for whoever wanted to not believe the headline. And the funny number of the day was Italy cut their GDP forecast for 2019 from 1% to 0.1%. This came in a little bit, just a few minutes ago. And now we have to think what this is going to do to their budget deficit projections, because these are percentage to GDP, right? So there was all this fighting between Italy and the EU. Is it going to be 2%? Is it going to be 2.4%? Well, I think we can all agree this is going much, much higher now. And this comes only a few days after Italy.
What a surprise.
Yeah, they haven't announced it officially, but there's been talks that they're going to hike their 2020 deficit target from 1.8% to 2.1%, and I'll still take the over on that one.
Can I take the over as well? How? Yeah. What is the? Yeah. Exactly. What are the odds? I mean, what are the favors? Just give me a number. I'm going to take the over.
Yeah. So we had that out of Italy as well, and now, nothing else is really happening today. I mean, on the Brexit front, there's been a lot of talk again about how long is the extension going to be, another extension after the 12th of April.
There is still negotiations going on between the Tories and the Labour Party.
Well,
about agreeing to some kind of a plan.
Still, I heard there's going to be a 1.618 extension of the Brexit talks.
Yeah, could be.
They're going to May's going to fib numbers now.
Well, over the past few days, May has been talking with Corbyn. There's been a lot of headlines flying, but really nothing concrete yet. So we sit and wait. And there was May did mention today, or a spokesperson mentioned today, that depending on how long the extension is going to be, then there will be preparations for the EU elections, which are coming up. Because if the UK leave, they're not going to be a part of it. But if they stay, they will. It's a mess. It's still a mess. And I personally think, if you put a gun to my head, I think they're gonna. I think that no deal Brexit is going to be avoided somehow, but they're really taking their time and they're really annoying everybody. So,
yeah, but the more they're taking their time, one way or another, the more the chances increase that we might get some disorderly kind of Brexit. Yeah. Because people start getting annoyed as well. I mean, this saga cannot go on for much longer. One way or another, we're going to come to a point that there's going to be, a big push for some kind of a resolution here and there. You know what I mean?
Yes. True. So our friend Simon just wrote that Italy announced the deficit is going up from 2% to 2.5%. Okay, so there you go.
I remember, when we had this discussion with the negotiations between Italy and the EU, that we were both saying that, this is ridiculous because no matter what they agree to, the vast majority of the chances are that they're actually going to overshoot that. And, both sides know that, right? And, it's just a charade, as the vast majority of, political discussions and negotiations these days are just a charade.
Yeah. And that's it. And then, actually, one more thing for whoever wants to hear something funny. Steve, we have a Greek space agency which was formed a year ago or something like that, the equivalent of NASA, because we've solved all our other problems, and this is something we needed. They actually they announced today that within 3 years they're going to send some unmanned thing or whatever it is to the moon. So there you go. We have solved everything else. This is what we were missing.
Okay, probably that's a joke of the year. I'm going to write it down and see if by the end of the year we can come up with something better. Yeah,
it was true. Anyway, that's it. So I don't have anything else, I'm afraid.
Perfect. Okay. Okay, let's go back to the charts. Let me see. But when you look at any sort of longer-term chart on USD CAD with a crude overlay, you can clearly see that there are some other factors at play. Of course, there are other factors, Joseph, at play having to do with crude. It's with USD CAD. It's obviously, absolutely not only the influence of crude on it, but there is, a strong influence of crude both on CAD and NOK. We know that. So. When crude is performing, well, That's going to be obviously a headwind. Sorry, a tailwind to CAD and NOK. Oppositely, when crude is underperforming, that's going to be a headwind. So the opposite, of course, is true for USD CAD and USD NOK, since they're in the denominator. Now, having to do with crude, we can see here on the 4-hour chart, that's what Blake was referring to. We have some kind of an outside black candle forming on the 4-hour chart. So, of course, a candle, no matter how bearish it looks on a 4-hour chart, it's still a 4-hour candle. I mean, it doesn't really say anything, but obviously even a daily reversal starts at some point within a day from, an hourly reversal that becomes a 2-hour reversal that becomes like a 4-hour reversal. So that's something to monitor. Having said that, we still need to acknowledge that this area, the 64 area, might act as support from this point on. So we've already overshot this ascending channel. We did find a little double top here on the 261.8% extension of this last corrective move that crude produced. For me to start looking lower, I would definitely need to see to begin with a close before 64. Before we can actually consider any bearish scenario. Having said that, I'm still a believer that crude should turn lower anywhere between here and 66. Worst case scenario 66. If I zoom out, you can see it's been quite a strong area of support resistance. So I've already started building a position here, and I'm absolutely fine with that, and I'm more than willing to add up at 66 if we make it there. Now, having a closer look at USD NOK, because Blake already covered at the USD CAD, so there's nothing to add there. As you see, I still have a small position long in USD NOK, and I'm looking to add lower because, as I've said many times, this 840 support area is a huge area for both bears and bulls, and you can see why. If I actually zoom out on the daily chart, you can see here that 840 is a triple confluence of supports. It's this previous corrective channel. You can see this is a multi-year corrective channel. It's a 200 daily moving average. It's also previous support resistance area. So as long as we remain above 840, I think that looking higher is the way to go, because in essence, the direction of the trend remains higher as long as we stay above that level. So I've already established one third of a position here. I'm out of the money. So in essence, it's like having a little bit more of a crude position. As you very well said before, it's not the only thing that moves, obviously, the USD NOK and USD CAD, but it does play a role and it influences their movement. So you can look at it any way you want. We can even take the parallel of this and see if we have some kind of a channel here. More or less we do. So I really believe that a break higher from this little channel should take us back to 880 once again. Now, let me see if I have any more questions, and we can start unfolding. Go cable, go. Okay, let's have a look at the cable. The cable has obviously failed miserably after this little spike that we had, but you can see here in the cable that we have a horizontal support area roughly at 130. It's also the 61.8 that has been acting as support, and it has been holding. Okay, so I think getting too much enthusiastic about the downside is not the best idea as long as we're holding above 130. Other than that, I don't have much of a comment to make, because I was monitoring this as an ascending wedge, which it was looking fine. But if that was an ascending wedge, when we finally broke down below it, you would expect a sharper move to the downside, and that's not what we got. So I think that the ascending wedge interpretation is probably not a proper one, but there are multiple interpretations from a technical perspective that you can come up with here. So I'd rather do nothing about it. As I said, there is a floor at 130. That's more than obvious. And there is resistance at 133.50. Now, if we do break below 130, I'm pretty convinced there are a lot of stop losses gathered there. So there should be more weakness. We should see a move towards at least 128. For that, I'm pretty much convinced. The same deal, if we break above 133.50, I think we should see an extension. Now, anything between that, I consider noise, and I would rather do nothing about it. Having to do with, and now let's combine those two, having to do with the USD yen. If you remember, I mentioned yesterday, and this is one of the charts that I linked early in the morning on the chat room, actually. If you remember, I was talking about USD yen being on resistance, even, if you have a look at it on the daily chart. On the daily chart, you can see this ascending channel that was broken. I said yesterday that it's now acting as resistance. The previous channel support is acting as resistance. And as you see, yesterday's rejection so far today is finding some, quite healthy follow through to the downside. So, I had my reasons of being bearish if I had to choose a direction. And, one thing I like, if indeed we see a continuation lower with the USD yen, is euro yen, actually, because if you have a look at euro yen on the 4-hour chart, this can likely be a wedge. So, this is quite a nice formation to follow, a little ascending wedge here in combination with some RSI divergence. I think that a move below 125 is going to be quite a nice indication that euro yen might depreciate towards this descending channel support once again, which comes at 123. So, there is a potential 200 pip move to the downside coming if we do break above 125. Of course, the wedges support is higher than that, but 125 previous support resistance here on the 4-hour chart, I think, is going to produce this follow through. It's going to provide definitely more of a confirmation for that move. As you see, the 50 simple moving average on the 4-hour chart also exactly on that area. As you see, currently under pressure. Now we can also have a look at other yen pairs. I don't think we did that yesterday, so let's go ahead and do so. As you see here, pound yen within a choppy consolidation, you can either you can interpret that as a channel. You can even interpret that as a triangle, depends on how you want to draw the line of resistance. So if you want to draw it like this, then it's a triangle. In any case, as long as we remain below 147, and at the same time, as long as we remain above 144, I would, in essence, be doing absolutely nothing with that. I think, there are better places to invest your capital to trade. Now, I still have a position in a Kiwi pair, and that is being short the Kiwi yen since we broke down from this wedge. So, it's nothing, extraordinary. I'm like, 70 pips in the money or something at the moment. So I'm not really happy with not seeing some follow through. I'm still waiting with this trade. It's a full position. I'm still waiting with this trade. And, if we do get a break below this 74, 75 area, I think we're going to get some follow through. If we don't do that quite soon, I think I'm going to book, just, those little profits and call it a day for that, because, I would have rather seen that move unfold much faster, and, soon enough, it's not going to, fit in my initial criteria. So Kiwi yen, anyhow, looks, decent to the downside in comparison, for example, with Aussie yen. Although Aussie yen, if you like the risk reward here, which is, quite great, you might want to play this to the downside as well. Why? Because we're testing for what? First, second, third, fourth. This is the fifth test of these likely triangles resistance. So, the risk reward is very favorable for another move to the downside, right? At least where you're wrong, and where you're wrong is just, if you want to if you want to be a little bit generous with your stop loss, still would be rather more or less 50 pips, I would say. So 50 pips of a stop to make an initial target, I would say this low, to make like 50 pips to the downside. So a 1-to-1 risk reward ratio for a first target. But, this can easily take us back down to this trend line support, which is another like 80, 85 pips to the downside. So, why not? It's a decent risk reward trade. But as I said, as long as Aussie Kiwi is overperforming, Kiwi Yen is a better candidate for a move to the downside. Now, having to do with CAD Yen, we had a look at that the other day as well. CAD Yen finding, a difficulty cracking through this 83.80, 83.90 area, but we have already broken above this channel. So I would be a little bit careful here. CAD Yen doesn't look that bad to the upside so far. So, I would rather stay away from this one for the time being. Let me see if we had any metals, gold, and exotics USDR, please. Absolutely, I can cover that. IWM looks like it's breaking down. Costas says, let's have a look at the IWM. By the way, I'm going to go through the rest of the questions. Keep in mind that I'm still monitoring this ascending wedge for the S&P. Obviously, first area of support here is at 2870 to 2880. Unless we break below there, there is absolutely nothing bearish to talk about. Yes, there is this wedge. Yes, there is some RSI divergence on the 4-hour charts. But, is that enough to turn bearish? Absolutely not. IWM still pre-market. But, I would be a little bit cautious even if it seems to be breaking down because we had this channel and we moved higher. So I wouldn't be surprised if we eventually saw another, fresh high before we saw some kind of rejection for the IWM from a technical perspective. Of course, that doesn't mean that, this is a rigid rule and you can't see a breakdown, without even seeing, new highs. But from a technical perspective, new highs would seem quite likely. The VIX is also diverging. You can see it here. I mean, on a daily closing basis, although we have been pushing to new highs in the S&P, the VIX has failed to produce new lows. But this divergence is very subtle for the time being. Okay, the DAX, on the other hand, we were monitoring this that ascending channel. Let me go back to the daily chart. There it is. And if you remember, I said specifically yesterday, I said, be careful here with the DAX because, it has the benefit of having broken for the bulls, of having broken above this strong support resistance area at 11,800. But on the other hand, it's testing that ascending channel resistance. So if you want to be a bull, I said yesterday, you would rather see a pullback towards 11,800 than see that level actually holding a support. And that is going to be a nice entry area. So as you see so far, this is playing out nicely. I mean, we are getting rejected from that channel resistance. So let's see what happens when we get back down to 11,800. If bulls are going to step in, if they do, I think that's going to be a nice entry level. If you're looking to gain some long exposure in Europe, I think buying DAX close to that level is going to be a good idea, and then you can see if it's actually holding or not, because we know how important that level is. As you see, Shanghai Composite has been playing out exactly as we assumed. Triangle, push higher. Now let's see if we're going to get another pullback as I envisioned back then, perhaps towards 3,000 before we see more upside. So I wouldn't be surprised to see some kind of weakness from here unfolding for it. FXI remains well bid as well. Emerging markets, one and the same. Nikkei, I said yesterday, be careful with this confluence of resistances near 22,000. So far, getting rejected from there. Of course, we need to see more price action. Now, going back to the question about metals and exotics, let's go ahead and have a fast look at what's happening with the exotics. Let me go through them very fast, and then we can go through the metal complex. So USDMXN, got rejected from these previous channels support that acted as resistance. So still a possibility of another low towards 1860. That's a likely scenario. USDs are still holding above this broken triangle, but the price action is quite confusing here. I mean, I can't really be a bear as long as we stay above this triangle, but the continuation higher was not what I expected. And the fact that we got rejected from the 61.8 is also not helping, with the bullish bias. Rejection from the 61.8, evening star formation, and now we're dripping lower. So currently testing the confluence of the 50 and the 200 DMA. I would be a little bit careful here being long. That's why I have actually no exposure. Price action was not was not very bullish. I would expect an acceleration higher after seeing the technical picture that we did, but we didn't get that acceleration higher. USD Turkish lira. I think from the price action you can clearly see that there is some fight between the fundamental forces of the market and some interventions from the Turkish Central Bank. There's no question about it. Keep an eye on this 580 level, 580 previous support resistance area. So far, the Turkish lira is holding that. So I would be watching that. I think if we break above 580, we might accelerate to the upside. USD ruble still consolidating within a large descending channel, but still that leaves the potential for more upside in the medium term. USD Singaporean dollar, we've broken above this channel, but we've had no follow through. So now I'm focusing more on this range because this is a nice rectangle. Let me draw it here in purple. You can see it here. Let me also clone this and bring it down. So you see we have a nice rectangle here between, let's say, roughly 136 and 134.50. I think a breakout from either of these levels should extend. As you see, RSI also exactly in the middle of the range, which also tells us that there is actually no direction for the market currently. Now, having to do with the metals, two scenarios here. I mentioned that yesterday. I had a conversation with my friend George on Twitter about that as well, because he made the same comment that I made yesterday. There is a bullish scenario now. I don't like the fact that we didn't take out the lows that we just tested them. And the bullish scenario is this being a triangle. We're going to know if that's the case if we break above this descending trend line, in which case I would expect one more push towards the highs, likely towards 1360, which is like a huge confluence of resistances. And then we might see like a deeper correction or even a reversal lower. Okay, so this 13 10 1350 area 15 area, quite important at the moment. On the other hand, if we break below 1280, we should extend to the downside at least towards 1260 1265. So this is the outlook for gold. Having to do with silver, as I said, it's quite important that the bulls are managing to hold these previous rectangles resistance as support, roughly between 1480 and 1490, this zone. So as long as silver is holding above that, there is obviously also like a bullish scenario. Same deal here. I would be watching for this trend line, most likely not as clean as we have with gold, but something like this. If you want to be on the safe side, I would be watching this previous high at 1560. If we break above it, then we can extend higher. On the other hand, if we break above 1480, I'm pretty convinced that we're going to see quite a strong move to the downside. So a break below 1480 is going to be quite a big win for the bears. I think the bulls should give up at least for some time following that. Now, copper, on the other hand, I mentioned yesterday that we might be seeing now a retest of this bull flag's resistance and support, and so far it looks to be the case. But I still need to see this break above the 3 level. I think that if that happens, then there is going to be, a continuation to the upside, likely towards this confluence of resistances at 315. So copper still looks very decent to the upside from a technical perspective. And that is that. Now, having to do with platinum is pulling back a little bit today. As I said yesterday, you should expect some type of a pullback, but be careful because this 875 area, this rectangle's resistance might act as support. So I do think that 875 might be a good entry area if you're looking to gain some long exposure in metals. And this is palladium. Now, palladium, I think this looks like some kind of a bearish consolidation from an Elliott wave perspective. This might be a flat, might prove to be some kind of a triangle or whatever the hell it is. From a basic technical analysis perspective, this might end up even being a head and shoulders formation. You can see it here, right? Shoulder, head, and we might get another shoulder here. So this, and as you see, the neckline also coincides with the 38.2% fib at 1320 roughly. So 1320, quite an important level of support. If we break below it, I think we're going to see more downside. I do believe that there's going to be more weakness. I still have 1/3 of my initial short position, and I don't intend to, to give up with it. Am I willing to increase my position? No, not at the moment. That's not my plan. Now, I'm not, because I had somebody ask me in the chat room about that. I'm not excluding, I'm not actually excluding the possibility that this might happen. Depends on how the price action unfolds. I mean, if I see some kind of a corrective structure here that looks very, very obvious, then I might add a little bit and take up my position from 1/3, like to, half of a position, something like that. But I really don't want to give back to this market because this was the third great trade of the year for me. These three trades, Ethereum long, palladium short, and crude oil long at the start of the year have really made my year so far. And, I don't want to, have the same market take away some of my profits. So I want to be quite careful here. Look at RTY. Let me see. Costa, sorry. RTY, let's see. Are you sure about the ticker, Costa? At least not supported here. That's why I'm asking.
Constant's a very passionate trader, in my opinion.
Oh, yeah, he absolutely is. EuroCAD. Let me go through EuroCAD first.
And he has conviction like, any convict. Mussolini's grandson will go to Europe. So all will be fine.
Yeah.
Benito. It's Benito.
Okay, so EuroCAD. I mentioned that yesterday. I really have no obvious bias here for EuroCAD. I said that, I like it to the long side when we were down here because price action was coiling and we were retesting these broken triangles resistance and support. But, we've seen this failure here. So I wouldn't be doing much with it at the moment, really. So, no bias here, in all honesty. I mean, I can understand the bullish argument as long as we remain above this low, but no strong conviction here. I wouldn't be doing anything with it. So sorry, I'm not gonna, I'm not gonna tell you something more about it because, in all honesty, what I think is that I wouldn't want to be involved with it at the moment. There are much better trades out there, so I would pick something different.
Yeah, Steve, and I just want to say this for the crowd, and then, we have to go to the interview. But isn't it okay, and actually isn't it wisdom to say, I don't know?
Oh, absolutely. There's nothing.
But you know how people feel insecure about that because a lot of people feel they should know. and that if they don't know that, it's inadequate because they should know everything.
Actually,
So take the pressure off
I
yourself.
like to monitor. I like to monitor a lot of tickers because it's one of the things that makes it easier for you not to push yourself to have a conviction about things. I mean, if you're
Great
watching
metric.
you're watching like 5 markets and there's not much happening, you're going to find yourself trying to persuade you, internally that something might be looking like a decent opportunity because you're always looking for an opportunity. So if
Because
there's
it's
no
hard
opportunity,
to wait. It's hard to
exactly.
Yeah.
Exactly. But if
What
you're
a great
monitoring,
idea.
or if you're monitoring like 40, 50 markets,
Oy.
there's no chance that something is not happening that's really interesting in one of them, or 2 of them, or 3 of them. You know what I mean?
My head just exploded.
No, I'm really now monitoring like
Well, I
more
don't
than
have
50
that
markets.
capacity.
But
some
you know
people
something?
don't. What?
But you know something? I started as an FX trader. Okay. My year so far, if I count only my
Outside
FX
of
trades,
FX.
if I count only my FX trades this year, I think I would be up like 3%, 4%.
Yeah.
Nothing. But the vast majority of my gains this year is
CFD.
Ethereum, crude, and Palladium, right? So
Yeah.
if I was only in FX this year, this would have been like a terrible year for me so far. I would
Great
have been
point.
spending so many hours monitoring the markets, and I would have very little to show for.
So can't a compromise be, instead of a huge number, maybe selecting a couple from different asset classes, commodities, FX, crypto, equities, interest rates, and then there's always something going on.
Yeah, but look at it from another perspective as well. The more markets you monitor, the more price action your eyes absorb per day.
Okay, I admit it, Steve. I'm a lazy guy. I just can't. All right, I just, I used to be able to, but you know what? Know yourself, know thyself. So, not everyone can do that.
Do we have a guest,
actually,
by the way?
yeah, Doug's waiting in the wings.
Oh, okay. Sorry, because I didn't even, I just realized that we've gone past the top of the hour. And
Yeah, and I mean, appearing on Face is, compared to Doug's been on everything, CNBC Europe, I mean, all the major networks. So I'm looking forward to talking to him, and I talked to you plenty.
Looking forward to listening to the interview then.
Okay, all right, buddy. Thank you, Steve, and very nice mentoring. You're a natural teacher. You don't even know it. Okay, Doug, I'm going to make you the presenter. Huh? What happened? It doesn't say when I click his name because he's on web. It doesn't let me make him the presenter. Can you do that, Steve? Douglas Borthwick.
I found him.
Normally, I just right click and it says you can make presenter.
Yeah, I have no idea. Oh, so he probably
he's on web.
Yeah, which means that he's not using the GoToWebinar software platform. I think he needs to.
Yeah, Doug.
Let me unmute him. Let me unmute him. Douglas, can you hear us? I unmuted you.
He could hear us even though you unmuted him, but
yeah, but we can't hear him.
All right,
yes,
Doug.
We can hear you. Absolutely, we can hear you. I don't think we've had somebody trying to come through the web. You can speak through this, but if you want to share your screen, you will have to use the GoToWebinar application.
Yeah, I don't have any screens.
You don't?
Oh, okay. Then it's absolutely fine. Then I'll just leave him unmuted, coach, and you can speak with him.
Okay.
I'll pass you the screen, coach.
All right. So thank you, Steve. So what I'll do is show my screen and show your website, Doug. Welcome to Face. Nice to meet you.
Thank you. It's great to be here.
So, I went over your website and I saw all the different financial stations you've been on, and you get great visibility and a little bit about what your company and you do. Why don't you tell us about the long and winding road from point E point A when you entered the industry to where you are here. How did it happen for you?
Yep, certainly. And first of all, thank you very much for having me today. My background, I guess, I went to Carnegie Mellon undergrad, and then after that, I went into Lehman Brothers economics area, where I worked on Latin America and the US, which was exciting, but at the same time, walking down to the trading floor, that seemed a lot more exciting.
Oh yeah.
I went to business school at Yale and ran into a guy called Richard Medley, and that's Medley of Smick Medley. And Richard's claim to fame was he wrote the paper for Soros about why sterling would collapse.
Oh,
Soros
wow.
obviously put on that trade, and it was a tremendous trade.
I also think his twin brother was in the Righteous Brothers.
I don't know anything about that.
Sorry, that was Bill Medley. All right, go ahead. Wow,
Hey,
what an educational background. Did you bankrupt your family?
No.
Okay.
He introduced me to Morgan Stanley's FX area,
Okay.
which at the time was rather small, maybe making maybe $100 million a year. And but there it was a group of individuals that had come from all walks of life and gotten into the trading. And back then, guys that were traders were really back office folks maybe 4 or 5 years prior.
Oh,
but
yeah.
the FX industry was growing so quickly that they moved into trading positions.
Yes, because I was an out-trade clerk on the floor before I had a seat. So you're right. That was the hope when you came to be a runner, is to be discovered or catch a break and end up, instead of handing off orders, executing orders.
Yeah. And
so you started that way? You went down there to do that?
No, I went there just to become a trader in the FX business. Mm-hmm. And I was the first associate that Morgan Stanley had hired into the fixed income area out of a business school. So It was sort of like a big change in that there was no real training program. Instead, I sat with the investment bankers doing their training program, and then went over to the FX area. And in FX, they gave me emerging markets to start. And at that time, dollar Brazil and dollar Argentina didn't move at all. They were pretty much fixed to the US dollar. Okay. And so I had Latin America and Asia given to me. And obviously, we went right into the Asian crisis.
Oh, the Thai baht.
Yeah, Thai baht was fantastic for us. And that was a time where we were accumulating balances when the market didn't have them. And then when the market needed them, we had the balances to go. And I think, as you saw in Turkey just a couple of weeks ago, when an economy is very upset about speculators, they raise the overnight rates. And Turkey went up to maybe 100%. Obviously, in Thai baht, it went to around 100%, but in Turkey, it went up to 1,350%. So
yeah, Erdogan won't do that this time. They haven't moved rates, have they?
Well, they did. They moved it up ridiculous amount.
Oh, okay. Because I remember that was his argument. He wanted to go intervention. I actually think it may have been Turkey that sold a boatload of gold to put the 1160 low in that day in the Asian session.
Well, Turkey last week went to 1,350% in the overnight rate.
Oh my God. See, that's how much I pay attention to. I look at the candles, but I really don't follow the fundamentals there. So, that's interesting you bring that up, Doug, because people think that interest rates, we're so conditioned here in the U.S. that they only go up when there's economic growth. But most of the huge moves in interest rates happen when a nation's currency is under duress.
That's right. And so one of the favorite things that folks like to do if they feel that the market's long dollars against their currency and they want to defend it is they raise overnight rates to an excessive level, thus squeezing out the shorts who can't afford to cover it and have to get out of their positions. And so, we certainly saw that in Turkey about a week and a half ago. And now Turkey's also used up a third of their FX reserves. So, Turkey's in a little bit of trouble at this point. But doing the Asian FX was fantastic because we got to really sit at the table while most of the currencies in the Asia time zone disappeared or certainly devalued considerably. After that, I moved into doing G10 forwards because no one wanted to trade Asian FX for a while. It was rather tricky. I think everyone was taught not to be short dollars against those currencies.
Mm-hmm.
And I moved into the forwards, so G10 and the emerging markets, and I traded that for another 5 years out of London and out of New York, working out of Tokyo, Hong Kong, Singapore, and then came back to the States, did a couple more years in the US, and then moved over to Merrill Lynch to run proprietary trading there. Another, a lot of our team had moved over to Merrill at that time, and just a great experience. And then I went to a company called Standard Chartered, and there I traded the Latin America business. And what was interesting about Latin America for Standard Chartered at the time was Standard Chartered had a lot of Asian clients. And in my view, it didn't make sense that more dollar Korea is traded in New York than in the Korean time zone, on the NDF basis. And so why aren't we trading NDF Latin America and deliverable Latin America to the clients that we had over there in Asia? So I did a marketing campaign, went out to see all the sales desks, Dubai, Mumbai, Singapore, Hong Kong, Shanghai, sort of 2-week visit of pitching. And then the sales guys there went out and got us Latin America business overnight, because our view was, if someone wants to trade Latin America, they want to trade it in their time zone. Why wait until the New York Open the next day? That was wow. That was an interesting business, a great business. And if someone paid me in dollar Brazil overnight, which meant that I was long dollars and short Brazil, or in other words, long risk, then we'd hedge that by selling Kiwi yen. Because Kiwi yen, as you know, when risk really goes poorly, Kiwi yen's the one that gets hit.
I'm very, I read about this in your background, but, I'm surprised that your, journey was mainly through FX. So are you still involved in the FX markets, what you're doing currently, or have you branched out into, what's your business model, Doug? Are you an RIA? Do you manage a fund? What do you do at Macro Intelligence?
Yeah, I don't manage a fund right now. What I do is I advise a good number of funds on trades that I think are interesting and important. I'm much less of a chart guy and much more of someone that looks from 30,000 feet at the machinations of essentially reserve managers, what policymakers are saying, but more importantly, what policymakers aren't saying. And then from that, deep dive into what currency pairs are going to move on the back of what action.
Okay, so from 30,000 feet, Doug, there are a lot of people ready to jump out without a parachute because of a lack of volatility in the majors, especially Euro USD. What do you see with your aerial view happening here on the FX landscape?
Well, I think there's 3 things that are happening globally that are going to affect FX, not right now, but certainly within the next couple of months. I think one is the weaponization of the dollar by the US is something that's being taken very seriously by central banks around the world. You've obviously seen Russia get out of 90% of their US Treasury holdings and put that into the euro and into the Chinese currency. And you've also seen, as every country's come forward and says, we want to price our oil in other currencies other than the US dollar, those countries have come under tremendous pressure and end up having a regime change. I think good examples would be Libya. Another one would be Venezuela right now that talked about having their oil sold in euros.
Oh, that hegemony goes way back, doesn't it, Doug? I mean, even, anyone that wanted payment in the euros even decades ago aren't around anymore.
Right. Yeah, but that's a problem. You don't want to end up on YouTube, losing your head. And so it was interesting. Just a couple of days ago, the Saudis came out and said that they were considering pricing oil in currencies other than the US dollar, and then they quickly retracted that this past weekend.
Why? Because they needed an arms sale?
Well, I think that because they had a huge...
They wanted some more missiles or what?
Well, obviously they've got the Aramco IPO that folks are discussing, but also the huge debt.
Or maybe, Doug, we satisfied them by naming Hezbollah a terrorist organization.
No, it wasn't Hezbollah. It was the Iranian National Guard. Oh, yeah,
that's right. Excuse me. Yeah. So that would make the Saudis happy.
I think it would make them happy, but at the same time, it's about the U.S. being happy as well. And the U.S. dollar to the oil is a relationship that goes back to the 80s.
Right.
And the Saudis have been buying a lot of treasuries. They hold a lot of treasuries. And at the same time, because oil is priced in dollars, it keeps the U.S. dollar as the reserve currency of choice.
Right. And you think that could be under threat? And could it be also because of foreign policy, especially now that the Democrats are in control of at least the House with an election coming up, and really not supporting the Saudis' campaign in what's the name of the country that there's a war going on right next door to them?
Is it Yemen?
Yemen, correct. Yeah. So is that part of it?
Well, you know, there was a speech that was made by Treasury Secretary Mnuchin about a year and a half ago, where he was discussing folks that were going around U.S. laws that they had against North Korea, U.S. sanctions. And essentially said, look, if you go around the sanctions, then we're going to take you out of SWIFT. Now, SWIFT, as you know, is the the international payment system in the U.S. dollar. Taking someone out of that would be crippling to their trade, because most trade is settled in U.S. dollars. Now, since then, China has set up a system, their own SWIFT. Russia's set up their own SWIFT. And the Europeans have set up a special purpose vehicle to allow them to trade with Iran, not using the U.S. dollar as well. So the weaponization of the dollar can have that feedback effect where folks start using the dollar a lot less in transactions globally. And if that's the case, then obviously the U.S. standing starts to move lower. And you can see that in the fourth quarter data for U.S. reserves, where central banks decreased their U.S. reserves, increased their euro reserves, and also increased their purchases of gold. And so I think that there's a lot of things happening in the background when it comes down to the U.S. dollar. And remember, we have a president right now that believes that the strong dollar is not in the U.S. interest, that the strong dollar encourages folks to buy U.S. treasuries, but U.S. treasuries don't provide U.S. jobs. What he'd like to see is a weaker dollar, because that would then invigorate the manufacturing base in middle America, which is where the voters come from for Trump. And so it's actually in his interest to have the dollar weaken somewhat relative to other countries. And I think that also plays into the trade discussions that we're having with China right now. You know, obviously,
they said they would not weaponize the yuan, so count on them doing it, and the yuan trading over 7. But you know, the art of this, and you know from being on trade desks most of your career, is not the if, it's the when. And do you think that there's potential for a dollar blow off before a major inflection point high for the dollar, or do you think we're peaking here?
I think we're peaking here, and there's a number of reasons for that. I think that one of them would be, you know, obviously the Fed picks that Trump's now picking for the Fed, you know, the Herman Cain, and there's more. And then the interesting thing with Herman Cain is, you know, he wrote in 2013 an op-ed where he discussed going back to, you know, the gold standard in the U.S. dollar. And so you're having, you know, folks that are much more in Trump's camp that are being suggested for Fed positions that will probably end up in the Fed.
You laughed after that statement. Why? Because gold would be 50,000 an ounce if we did that?
Well, what you would expect is you'd certainly expect the U.S. dollar to weaken considerably versus others, which is where we come into sort of a Plaza Accord type discussion. Now, the Plaza Accord, obviously, when that happened, the Japanese yen took a considerable hit and has never recovered the Japanese economy. Now, let's say the U.S. in these trade discussions with China says, look, we're going to put in this language, and the language says, that you're not going to weaken your currency relative to the U.S. dollar going forward. So in other words, you're taking out the top side or the weakness of the yuan, but at the same time, you're saying that the Chinese currency can appreciate. Now, the Chinese bristle at that. And so Trump then turns around, and this isn't obviously public, and this is complete speculation. But my guess is that he turned around to them and said, look, if you don't do this and you don't sign on to this, then we'll do a Plaza Accord on your currency. That would obviously weaken the U.S. dollar against the Chinese currency. That would see the euro pop much higher and the yen pop much higher as well. Now you could say, well, where would you come up with something like that? Well, 3 weeks ago, Chinese policymakers went and visited with Japanese policymakers who were around during the Plaza Accord, and ask them pretty much, what was the effect on the economy with the Plaza Accord, and how have you dealt with it? Now, the only reason you would do that is if it was on the table. And so I think that there's certainly a discussion of that, because what you'd want to do is, if you went to a gold standard or you wanted to fix other currencies to the US dollar, you don't want to fix it when the dollar is strong. You want to fix it when the dollar is weak. And I think that there's certainly thoughts, views out there in the Trump administration that a weaker dollar would be very good for the US economy. It'd obviously be very good for equities, and you see equities spike. But it's also a way for you to get inflation in this country, and inflation right now is just non-existent.
That's right, debasement. So are you positioning yourself on the long side of euro here around the 112 level? And
well, I think, this 112.80 certainly, once goes, and has it gone yet? Yeah, we're at 112.81 now. I think there's a lot of optionality this morning, but I certainly believe that the euro could have a spike higher, given that market positioning still is looking for a lower euro, even as central banks are sitting there and they're buying euro and decreasing dollar reserves. And I think of central banks as being much more important in these markets, mostly because bank trading desks no longer take significant risk positions. So the bank trading desk today is staffed with folks that are essentially agency traders. Yeah, they lay off the risk. You get paid for £100 million and you get out of it immediately in the market. You can't take the risk thanks to the Volcker Accord. So there's a lot of things that you can't do on a bank trading desk anymore. That back when I was on a bank trading desk, we'd have maybe 12 people, and you'd expect that 7 would be right every night and 5 would be wrong. But using monitoring your risk on the downside, it was always a profitable day. And the banks can't warehouse risk anymore. They can't take risk anymore to the extent that they used to. And so it's the central banks that are the ones that are the main purveyors of movement. And so I always like to suggest to folks that they go along with the tide, where the tide is defined by central bank activity.
Okay. Does central bank activity show up in the COT under commercials, or it's completely separate?
Central bank activity is going to show up on a quarterly lag, and you can look at sort of the COFR report when it looks at how reserves are going. Okay, that's how you would do it in the public. But obviously, otherwise, just talking around different trading desks, you can figure out where things are. And really, it's about who the trading desk's not talking about, because obviously they're sworn to secrecy. And if they're not talking about a central bank doing something, then the odds are that they are.
So could this new formulation of currency, a lot of people are talking about the potential of a new SDR based upon the debt to GDP level for each nation, and that would definitely lower the U.S. on the ladder?
Well, there's two ways that reserve managers look at the reserves. They look at them in terms of who are they trading with and what percentage of their trade is done with that country. And the other one is obviously the SDR weightings. Now, the SDR weightings are overweight US dollar and very underweight the Chinese currency, but they do include the Chinese currency now. But what you find on trade is that folks are the number one or number two trading partner around the world is either the US or it's China. And so given that the Chinese are doing so much trade right now, they're also encouraging folks that if they trade with them, they'd rather accept them and to do the trade in the Chinese currency rather than the US dollar. Then you have to expect that reserves are going to start moving towards China. Now, the Chinese bond market, though, is minuscule and compared to the US. And so they're working very hard to make it a much larger bond market. And the Chinese bond market was pretty much the largest beneficiary of Russian money leaving the US. And so I think that you're going to find as reserve managers, and they've already doubled in the last 2 years, their reserves in the Chinese currency. But as they move reserves into China, it's going to be at the expense of the US dollar, which is why I think when folks look at something like, they look at dollar China, they think, look, it's going to blow up much higher. We're going to go through 700. You're going to see a devaluation in China because of all the debt they have there. They sort of forget that the US has a lot of debt. And at the same time, the US dollar rises because people have to buy the US dollar as reserves. And if folks have to buy the Chinese currency as reserves, then they have to essentially up their reserve requirement in China by at least 50% a year. That's a tremendous influence of the China economy and into Chinese fixed income markets.
So are we, once this happens, say the Saudis make the move and the petro currency loses its prominence, the U.S. dollar, and all the other SWIFT systems that have been developed because of the threat that we use to eliminate people, it's just going to really reduce the standard of living of people here in the United States that'll start paying like $5 for a loaf of bread?
Well, I think that if there was inflation in the U.S., first, I mean, I've seen lots of loaves of bread for $5 already.
All right, okay. I mean, go ahead.
In general, I think that folks don't really notice quite as much, and maybe they start buying American rather than buying Chinese. And you know, the U.S. has a propensity and the ability to manufacture goods in the U.S., but manufacturers don't build in the U.S., and there's a good reason for that. It's because if you're a foreign manufacturer, and let's say you're a manufacturer in, let's say, Japan, and you want to build a factory somewhere, you build it somewhere where you know that every single year your employee or employees are going to cost you less. But if the US dollar continues to rise every single year, creating a manufacturing in the US plant becomes much more expensive because the employees become more expensive every year. Now, if you can manufacture in an economy where the currency goes down every year, you know that your employees become cheaper every year for you. And that's a much more positive thing. So the strengthening US dollar cripples US manufacturing. Mm-hmm. And so, you know, folks may realize, hey, you know what? I'm paying a little bit more, but I have a job now. And so, you know, there's trade-offs.
They probably should have some gold coins and silver buried in a coffee can in the backyard, don't you think?
Well, I think that gold and silver are very good in terms of hedges, obviously, for inflation or
for what you're talking about, Doug.
Yeah, absolutely. But
I
at
mean,
the same time,
why hedge? I mean, what you're talking about is, really a major paradigm shift in the FX arena away from the U.S. dollar. How can U.S. citizens hedge, which you have experience with, or speculate and create and make this crisis an opportunity?
Well, I think that most U.S. citizens can't hedge against it, other than through owning real estate. Yeah, but the thought of buying gold and silver obviously makes sense, but most Americans can't sit there and buy gold and silver and put it in their pocket because they don't have, what is it? JP Morgan said that most folks don't have $400 in their bank account. So wow. The thought that most folks can go out there and sort of buy some hedges against a risk like this is it's not really
feasible.
Yeah, it's not really feasible. But certainly real estate you'd expect would start rising, much as it did in the 70s when there was hyperinflation, because with hyperinflation, real estate is a great hedge. And most folks own a home or have
not
some
anymore. The hedge funds own them.
That's right. Maybe the hedge funds have already found their hedge.
Yeah, that's right. They're now the landlords of the people that lost them.
Right. But one really interesting thing in
pisses
the hedge
me
fund
off,
world,
Doug.
I'm sorry.
Yeah. I mean, why do people call it the Great Recession? It wasn't great for a lot of people.
No, it was. I think it was absolutely terrible for a lot of. I think 2008 was very debilitating for a good sector of the workforce, and that was after 2000 and after 9/11. I think was very bad as well for the U.S. economy and for the U.S. And I think we've had the same thing in 2008. I think we'd probably been better if instead of the Fed bailing out the banks, we'd let them fail. And had a growth period on the back of that, but instead we've gotten into this mess with QE, where unless there is that sweet sugar in the market starts to take a bit of a dander and starts to come off. So the U.S. is in sort of the slippery slope where they've gotten the market over the last 10 years convinced that they're always going to be there to support equities and to support global finance, but at the same time, taking that support away or taking the punch bowl away is seen as a very, very negative thing for the U.S. economy.
Okay, so very interesting discussion. What are you telling your institutional clients to do in this environment? Just move away from the dollar, diversify away from the dollar in the yuan or the euro or in commodities? What's the strategy based upon your narrative here?
Well, I think that the Chinese currency is a tremendous opportunity to do a number of things. Obviously, the Chinese currency is a basket of currencies. It's based off of the US dollar, euro, and yen. It's sort of like the SDR in that respect. And buying the Chinese currency gets you that sort of that basket of dollar weakness if you want it, and if you're looking for that. And if the trade deal, my view is either the trade deal with China is going to protect your downside, or if China backs away from a trade deal, you're going to get a nice upside as well from if we were to do some sort of Plaza Accord. So I think the Chinese currency, as even though there's so many folks that are against China, I think that it acts as a very good hedge against any of these sorts of shocks to the system. And volatilities are so low right now across the FX plane.
Yeah.
And what's really interesting is the last couple of weeks, you've heard about how volatility being so low is hurting hedge funds, but that's only the hedge funds that are long volatility. The ones that haven't had an opportunity or had a position in it, this is a great time to be involved.
Right, when no one's interested. Never sell a sleeping market.
That's right. I mean, one really interesting thing, like volatility in Turkey was around, I think it was like 12 or 13% a couple of weeks ago when interest rates were at 25%. And I think in general, if you have an interest rate differential that's higher than where the volatility is, there's some tremendous opportunities for you there because you can earn the carry on the straddles. So I think
living in Turkey now kind of reminds me of the movie Midnight Express. So, I don't have a lot of interest in it, but, you are very interesting, Doug. And I'm so glad I reached out to you. We haven't done this before together, have we?
No, we haven't. No.
All right. So you know what? It's a promise. We're going to do this again. I learned from you today, like it or not. Doug, you're my trading warrior brother now. And the best way for people to follow you, would it be on Twitter or your website? And
they can do
is
either.
there anything that you do for, guys like me that aren't, big institutions that I could sign up for on your website, which I'm showing right now?
Yeah, certainly. But there's a number of things that we do. One is for individuals. We do like the fireside chat. It's sort of like an hour where you see your trainer. And you go see your trainer and you talk to them and say, hey, give me some talking points. What's going on in the markets? And we sit down with folks for an hour or so and really discuss with them. And we do it with individuals. We also do it with institutions. And so there you get an hour of my time to really, go over what's going on in the markets, what we're expecting, what we're thinking. And that's sort of, on a very personal level. We also do, obviously, talking at trade shows or talking in the press. We do advisory for corporates that are doing hedging transactions. So, corporates got to buy 500 million euros. How do they hedge that? What kind of options should they be buying? Who should they be talking to? The granular detail that gives the CFO a CYA. And I think that that's very important. And then the other thing we do is we've got about 35 sales guys that go out there. And if someone has something to sell, we can get it distributed very, very quickly globally. And we've got guys in London, guys in Singapore. So if you're an ECN in the UK or you're a retail shop that wants some more liquidity, we can source that from you and get it for you very, very quickly. And that's the businesses we're in right now.
Okay, great description and very diversified. Thank you, Doug. I really appreciate your insights and follow the money of central banks and what they're doing, and something that probably we're going to see unfold in the next couple of years. Is that kind of your time frame? Something like by the end of 2020 or so? Maybe the U.S. elections we'll see this shift away from dollar supremacy?
I think so. I mean, I think that you can't do a shock 2 years into an election cycle, but certainly after the election, you can. The game's open. But I think that long China right now makes a lot of sense for all the reasons I've given. But also, I think a trade deal is going to come very soon, and so I think that you're going to see some upside in China. And
if you're right, I saw that post that you put up about China. Yields are about to bottom out and head back up towards that 3.25 level, don't you think?
Well, I think that given the absolute central bank demand right now, and given that the supply, the demand is outstripping supply for Chinese sovereign debt, and so I think that yields in China are going to continue to drop, and I think China's actually going to,
how about U.S.? U.S. I'm talking.
Oh, and sorry. In the U.S., I think that U.S. rates are low right now. I think that they will start to move higher, but
Okay.
I don't think the U.S. rates is the story right now because it's such a manipulated market. I mean, I can't point to one interest rate around the world where I could say this is a risk-free rate.
Okay. All right. Well,
when the risk, the old definition of a risk-free rate was that's where the market has the rate, but the U.S. rates right now aren't set by the market; they're set by the Fed.
yes, central planning, a
That's
new
right.
era. We've seen it all. We've seen
It's
it
the
all.
Dutch tulip disease.
What's it called?
The Dutch tulip disease.
Oh,
It's
okay.
where you find out you've got one product that everyone wants in the world and you take advantage of it. Well, for the U.S., it's the U.S. dollar.
Okay. That's going to be the tagline on your interview. So thank you, Doug. Really great to meet you. I wish you and everyone your written and verbal words reach a lot of success in navigating what you see ahead.
Thank you very much. Thank you so much.
All right, Doug. This is Doug Borthwick, and you could follow him. Go to his website. Here's his email, and here's his right here. His Twitter handle. That's not coming up for me right now. That's going to fail. So we'll wrap it with that. Thank you, Doug.
Thank you.
The interview will be processed and rendered, and it'll be out on Twitter in 2-3 hours. Okay, buddy?
Great. Thank you very much.
All right. You're welcome. That's it for Turnaround Tuesday, everyone. Remember, don't just count your pips, count your blessings, and stare at your dollar bills, your hundreds right here, and think about conversion. Talk to you later. See you tomorrow. Adios.